Good morning.
Glad,
Good morning.
glad to see. Good morning. There everybody is. I was so quiet. I'm like, where is
Good morning.
everybody? Good. You were probably wondering, is anybody going to be speaking anytime soon? Well, thank you. It is now 10:30 on the dot, and I wanted to respect and be intentional to respect everybody's time. And thank you for being here. And I wanted to formally introduce myself. My name is Sabrina Davis, and I am and have the honor of working directly with Fulton Bank. And my position with Fulton Bank as a financial advisor that I have been over the last 27 years, I specialize in small business administration and doing business loans. So therefore, the Women's Business Center that you're joining in this morning has asked me to come and talk about how to finance your business venture. For all of you that are on the call today, either starting your business, thinking about starting your business, or maybe you've already started and you're looking for strategies to put in place to be able to find funding for your business, that's what I'm here for. And I wanted to, again, thank everyone for being here. I think you're on mute. Deborah, I think you're still on mute.
I was on mute. I'm sorry. Thank you, everybody, for joining us today. And thank you, Sabrina, for doing this workshop for us. Sabrina Davis is the Vice President at Fulton Bank, and she's been doing this specific class for us for a while. It's very popular. Okay, Sabrina, thank you so much.
And thank you for having me. I'll try to live up to that expectation.
You will. There's no doubt in my mind that you will.
So thank you again for everybody being here. And as I mentioned, being a financial advisor for over 27 years with Fulton Bank, what our goal is today is to bring some resources and ideas and give you some things and strategies to think about as you are trying to incorporate funding for your business. Again, as I mentioned, whether you're in the startup phase, whether you're just, you have a great idea, you're thinking about starting up a business, or maybe you've already been in business and you want to take on a project, that's great. And these are ideas and strategies that you can put in place and think of when you're looking to fund your business. So we're going to start with a very short video and discuss what some options are for funding your business. So to start this video, it's going to kind of encompass whether you're looking for debt financing, whether it's a loan with a bank or a line of credit, credit card, all of that, options there. And then how do you decide what's the best product? And then as equally as important, where do you find those products from? And we're going to talk about how banks are different and how credit unions are different. So you can choose the right bank and the right credit union for you if you have not already chosen the right bank and credit union that you want to use. Then we're going to talk about a different type of funding your business. And maybe you cannot get bank funding or credit union funding, and maybe you can look for options for investors. And we're going to talk about a few types of investors and leave that to your discretion as we end the call today. But I want you to know that you're welcome to reach out to me whether you choose Fulton Bank or not. I'm here to help. As I'd mentioned, being a financial advisor for 27 years, I specialize in business lending. Whether you use Fulton Bank or not, or we're looking to point you in the right direction of the right funding resource for you. Whether you're looking for an SBA loan, Those are all the things that I do. So please feel free to reach out to me. And a lot of customers will ask me in the chat room, well, do you charge for your service? And the answer is absolutely not. That's why I'm here to represent Fulton Bank on behalf of Fulton for the Women's Business Center, because I want you to know those different resources that are out there and see what we can do to help you. Excuse me. So we're going to start off with this very short video, and then we're going to move forward with discussion right after that. I will tell you and ask you, as we go through this journey together of the next hour and a half, please feel free to put your questions in the chat room, and I will continue to try to move forward, taking breaks to answer any questions that I have seen, and making sure that your time is valuable.
Thanks, Brett.
Most young companies need money, which may or may not come as a big surprise, but they do. The number one source they get money from is from their own savings, whether it's a few $100s or even thousands of dollars. That's what we tend to tap first. And a lot of companies don't get money from any other place. They get money from their own savings, and then after that, they're lucky enough to be cash flow positive. They're profitable. So we talk a lot as if all companies require all sorts of external capital, and the reality is that more than half of young companies get all their funding from a combination of founder savings and then cash flow from the business, and we're out of here. Next up on the list is another one that catches, I think, people by surprise, and that's credit cards. Almost every young company you can think of, to one degree or another, was funded on credit cards. And it is the single largest source of capital for young companies after founder savings. And then the next place where they tend to get money is from friends and family. After I've tapped up my credit card and I've used up all my savings, I turn to people I know and say, hey, will you help me? And that's the third biggest source of capital. And then the next place is banks. And the banks are a totally weird situation, because with banks, they get a lot of attention, but they actually fund very, very few young companies. But it's not their fault. You have to think about the way bank lending works and how shareholders want banks to lend. They want them to lend money against secured assets. And young companies don't have any security. They have nothing to secure it against. And the joke in the industry is you can get all the bank funding you want as a startup as long as you don't need it. And then the last piece is venture capitalists. And they get the lion's share of the attention, which in some ways is warranted. You know, your Googles and Apples and FedExes and many others all have venture capital money inside of them. But the reality is, and this is from Kaufman research, less than 20% of the fastest growing companies in the United States took any venture money. And that's not because the VCs wouldn't give it to them. It's because they didn't want it or didn't need it, because they had all those other sources. I don't need money, and I certainly don't need money on these terms. Because, you know, venture capitalists, unlike banks, they don't lend against secured assets. They give you money in exchange for shares. So they take some of your company away. So my answer is if you don't need it, definitely don't get it. There's no question the venture industry has become staid. The irony is it's intended to fund disruption, and yet it's an industry that has become complacent. And interestingly, over the last 5 or 6 years, we've seen the emergence of other mechanisms for funding, like AngelList, like these kinds of peer-to-peer funding sources, as people increasingly provide capital in smaller amounts, but more people doing it directly. Having said all of that, though, venture capitalists are hugely important for those young companies that don't have access to bank money, but are growth companies. They have the prospect of being a $5 million or a $10 million company in a couple of years, and they need that growth capital to get there quickly to raise. And the way you play the race is by getting money from people like venture capitalists who give you the money so you can compete with other people who are racing as fast as you are. If you can run a company off cash flow and some combination of credit card, your own savings, and friends and family, you know, Bob's your uncle, run, you know, keep all the equity, because, you know, there's no better thing than being in full control of your own destiny.
So that kind of sums up what we're going to be talking about today. And things that I want you to think about as we are going through this journey together over the next hour and 15 minutes. You know, we we often have those professionals that are important to your business. And I wanted to review what those professionals are, who they are, and the right relationship that you want to have with them. So I call it the BAIL team. BAIL is the acronym. B is banks. A is accountants or CPAs that does your taxes. I is insurance companies. And L is lawyer or your attorney. This is the critical team that you need to be very intentional in interviewing and making the right decision for what's best as a trusted advisor for you and your business. All banks and credit unions are not the same. They're all different. It doesn't make them a bad bank or a bad credit union. It just means that you've got to do the research and interview the different banks to make sure that it's the right bank that can help you as a trusted advisor for whatever capacity that you need, whether it's lending, whether it's just understanding how to handle your business through financials, meaning a checking account, a savings account. Maybe you need funding, which is business credit card. Maybe it's a business line of credit. Maybe it's a business SBA backed loan. Maybe you just need a little bit of funding, or maybe it's a large project. It's really important for you to understand, just because that bank or credit union is on the corner of where you live or where your business is, they may not be best suited to help you strategize and come up with the right information and options for you and your business as a trusted advisor. So, this seminar, I do want to give you a disclosure in advance. This seminar is for educational purposes only. It's not intended for legal, tax, or investment advice. But what I'm talking about on the BAIL team, the accountant and your lawyer and your insurance company, they're all needing to be interviewed by you for you to decide what is the right partner and partnership for you. So keep that in mind as you are figuring out who is going to be on your team to be helping you become successful. So the other thing that I want to share with the group today, there are really top 3 reasons if a business were to fail, the reason why, and I don't want you to fail. And let's discuss those reasons so you can mitigate that risk and keep your business from failing. So the number 1 reason is lack of planning. If you are failing to plan, you are planning to fail. So what can you put in place as a tool or research to help your business be successful? And one of those things to understand as a tool is a business plan. It is one of the requirements if you're looking for SBA funding, Small Business Administration government-backed loans. They, meaning the bank, will require a business plan in order to apply for that type of loan. So why not have that in place in advance to be able to apply for that loan? The other thing that you want to think about is a business plan is really your roadmap to success. It will help you take a deeper dive and understand what is required in your business in order to become successful. The second reason why some businesses might fail, you just don't know what you don't know. And in order for you to overcome that, one of the things that I want to congratulate you on today is you're here today to talk about and look at different options of things that you might not know, which is the Women's Business Center and the seminars that they offer to educate you and help you understand what are the things that I don't know and how can I overcome them in advance. So I encourage you to continue taking these classes and continue to skill up on things that you should know that you might not know in advance. The third reason, lack of capital. The reason we're here today to talk about different options to fund your business, whether it's Fulton Bank you choose, whether it's Bank of America that you choose, whether it's Wells Fargo, maybe it's Langley Federal Credit Union, maybe it's Truist, whatever bank you choose or credit union, make sure it's the right bank or credit union for you because we're not all the same. So the Women's Business Center has me also speaking for another reason. They know that Fulton Bank is very user-friendly when it comes to helping startup businesses. And that's where a lot of banks are not in the space to do that. What that means is if your business is in the startup phase, life cycle, or maybe you've been in business for a while, but you're not knocking it out of the ballpark as far as generated sales, how do you find those banks to fund your business? What options do you have out there? And there are banks that are willing to help startup businesses like Fulton Bank. It's important for you to ask those questions in advance so you can make the right decision. Who's the right trusted advisor and the right financial institution to help you fund your business? So we are going to help talk about the differences between debt financing your business and equity investing in your business. So the difference between debt financing is obviously a bank loan that allows you to maintain ownership and control. It will require repayment with interest. Basically, it's fixed rate, fixed payment at the end of the day, it's gone, or a line of credit, it's a business name that you can continue to draw from. It's generally considered the cheapest way to grow. So equity investment financing your business, that's involving investors. Typically, they give you money and it is exchanged for partial ownership for the business. It typically means that you have stock, or stockholders. Money is not paid back to where they go away after it's paid back. They own a percent of your business, and they will own that percent of the business unless you have it in writing that after a certain amount of time you have paid them and the investor will go away. And typically investors can have huge benefits beyond the money. So the questions you want to ask yourself to decide which road you go down, do I ask for a bank loan or do I look for an investor? How much money do you need? How much control do you want? What's your bargaining position? And not all capital funding is appropriate for all businesses. So as you are deciding which road you go down, I want you to understand that typically, whether it's a bank or it's an investor, we are going to want you to have skin in the game. So we may ask for you to inject or put money into the business before we give you the loan or the investor gives you their money. And it could be anywhere from 10 upwards of 30%. If you're looking for an SBA loan, then it's only required 10%. If you're looking for a conventional loan, it could be anywhere from 20 to 30% that the bank is asking you to put in. If it's an investor, they may ask for you to inject more of your own money. So where do you come up with that cash injection? What type of funding can you look for when it comes to where do I get that 10 to 30 to upwards of 50%? Well, that can be through the cash or savings that you have. It could also be equity that you're using in the home. It could be through friends and family. Just make sure it's contractual. You have a binding agreement. It could be using a credit card. It could also be through retirement funds, or maybe you have equity or stock portfolio. So let's talk about the road of debt financing. What do banks look for when they are looking to approve you for the loan? Let's talk about some products that you can ask for. Of course, there's credit cards, which in the video they had mentioned it's the #1 source of funding for small businesses, because typically small businesses may not have money to inject in the business, or maybe you're a startup and you just need a small amount of money. Well, business credit cards are a great way to start business credit, and also for you to maybe fund the project on a smaller project level. And you can even be a startup business and receive a business credit card. I'm going to give you an example. Fulton Bank has a business credit card, and it's 20 months, no interest, and no annual fee. Almost gives you 2 years to fund your business. Maybe you just need small amount of supplies, 10,000 or less. Business credit card might be a great resource for you to find that funding. And right now in that situation, you could be a startup business and you can use your personal credit score in order to get approved for the credit card. Then there's a business line of credit, a line of credit that is served for helping the business on a residual revolving basis. And it's in the business name, or maybe it's a business loan for the business. Fixed rate, fixed payment at the end of the day, it's paid off and the balance is gone. Maybe it's an SBA guaranteed backed loan. So let's talk about what SBA funding is. First of all, you have to find a bank that is user-friendly and that does SBA-backed loans. Fulton Bank is one of those banks that do that. Well, where does SBA guaranteed backed loans come from? And also, what's the purpose of it? So let's say you need a business loan, but you cannot get the bank to fund you for your loan request. Then you are looking for a bank that offers SBA-backed guaranteed loans. Basically, the bank goes to the government and says, look, I need you to guarantee this customer's loan up to 90%. So if the customer were to default, we can actually come to you, which is the government, and ask you to pay 90% of that balance. It is a great way to get you financed for your business if you cannot get conventionally financed. In other words, you have 2 to 3 years tax returns that can show proven sustainability that you can make the payment for your business and show a good amount of sales for your business or generated revenue. So an SBA guaranteed back loan is, for an example, where we might at Fulton Bank go to the government and say, look, we think it's a great idea, but we need you to fund the business. And then that's why it is important that you're looking for a bank that does SBA financing as you are interviewing the different banks to find the right bank for you. And then there's microloans or leases. Basically, it's equipment financing that's 100% financing, and for equipment and other options for smaller projects. But let's talk about what the banks look at when we are trying to approve you for your line of credit for the business or your loan for the business. I call it the 8 C's of credit to get you to have the lender decision approved. And what is that matrix? So we look at your character, we look at the capacity for the business to pay back the loan, we look at whether or not you have collateral, we look at if you have capital, money saved in the bank. We also look at conditions, what the economy is doing. We also look at your cash flow for your business. We look at whether you're fully committed, and we'll talk more about that. And number 8 is we look at your personal and your business credit score. Let's break down each one of those and talk about what they all mean. So number 1 is conditions. This is the bank is looking at any outside circumstance that could positively impact your business or negatively impact your business. Any economic trends that are going on, the stability of your industry. We want to know if your industry has been in existence for a while. We're looking at your local market conditions, your competition, and we want to know if the amount of the loan that you're requesting is justified for your business. I'm going to give an example, COVID. Well, if you were a restaurant, you might have been negatively impacted very catastrophically by the pandemic. So things that we're going to want to talk about is what have you put in place to make sure your business is going to be successful if there's another pandemic. That is just one example of an economic trend that could negatively impact your business. But let's look at it a different way. Maybe you're looking at starting a business and you have a takeout service or you have outside seating for your restaurant. That could positively have impacted you during COVID, because while all other restaurants that didn't have that had to shut down, the restaurants that were takeout or drive-through, every customer went there instead. So you might have had an increase in your generated sales revenue at the time for COVID during the pandemic. So those are an example. That's just a very short example of what could happen positively or negatively with the same circumstance. Number 2 is your character. Basically, this is your resume. We want to know your experience in this industry. We want to know how knowledgeable, what your skills are, if you've had any training, if you've worked in this industry before, have you even run a business before? Have you opened a business and owned your own business in the past? We want to look at what relationship you have with us. We want to look at any payment history trends that you've had either with us or any other bank. We want to look at your background. We want to also look at all the skills wrapped up to make you successful in this industry. Number 3, do you have collateral to offer up for the loan or line of credit? So when it comes to collateral, and maybe you're a startup business, we're looking for one of 2 things. Outside source of income, because at the end of the day, the bank just wants to know they're going to get their money back. Or if you have real estate equipment, whether it's personal real estate or business real estate equity, that you can offer up to secure your loan. And in some cases, the bank may or may not ask for this, but you need to be prepared to have that conversation. So types of collateral that we will accept from banks is equipment, vehicles, cash or CD, and of course we had talked about real estate, whether it's personal real estate or business real estate. So things that we're going to look at to consider the collateral is, what are you financing? Does the collateral have or hold value? What is the useful life of the collateral? A great example is computers. The useful life of a computer is very short-lived. So we might not value that computer as highly as we would value vehicles. What is the loan to value? What was the cost or is the cost of that collateral? At the end of the day, do you have assets that can be claimed if you don't make your payments for whatever reason? There's no judgment here. There could be COVID that caused you to have this negative impact. So the question becomes, does the bank have a backup in case you are not able to make your payments and you have to shut down the business? This is another factor that we take in consideration. Number 4, liquidity. So we want to know if you have money in the bank. So remember, we're looking to see if you have money in the bank, not only if we're asking you to inject your own money, cash injection, which is the 10 to up to 50%, but we're also looking to see if you're asking for a loan for $50,000, you have no money in the bank, and at the end of the day, you've used your $50,000. What do you have as a backup in order to cover a negative impact? So let's say you come to the bank and you say, I need a $50,000 loan. We give you $50,000, you have no money in the bank. At the end of the day, we're looking at, if you have an unexpected emergency, how much money do you have in the bank in order to pay us the monthly payment until you get through that unexpected emergency? Now, money in the bank may be a consideration of a business credit card you can draw from, retirement accounts that you can draw from. We just want to know, what sources do you have in case you have an unexpected emergency for the business? Number 5 is capacity, the ability for the business to pay back the loan. SBA is a great mitigator if you're just starting a business, because SBA, remember I had mentioned they'll take a business plan. Well, in the business plan, you'll have to incorporate 3 years of projections, which is basically your best guess of all of the cash flow, money coming into the business and money going out in the business. So in order for you to understand that, you need to know how much money you will need. Do you know what your loan payment will be? So you can put that in your projections. What is the primary source of repayment? We look at residual income or outside source of repayment, like Social Security, a second job, maybe you have retirement, maybe you have rental income from properties. Those are all outside sources of income that we will take in consideration. Number 6 is your cash flow. Do you know of all the money coming in? And do you know all the money going out? That is all your fixed and variable expenses. Do you know the cash flow of your business? How long do you want to keep your business open and afloat in case you don't have one customer that walks in the door or sell one product for that month? Commitment. Your willingness to be all in. You may have a great idea, and you may also have equity in a home. And then if the bank comes and says, well, we noticed that you've got equity in your home, we want you to use that as collateral. And you're like, wait a minute, Sabrina, that's my personal asset. That's my business. That has nothing to do with my business. I want to keep that separate. Well, you have that option. However, it may be if you don't use the equity in your home as collateral, the bank's not willing to give you the money. Because if you're not all in, why do you think the bank wants to be all in? And it's just a different mindset of your willingness and commitment for your business. You need to be all in. Things to think about. And number 8, personal and business credit is critical to the success of one of the factors that we keep in consideration to the approval of your loan. So keep in mind, we talked about 8 factors, not 1, which is credit. And that's number 8 on this list. It's not just if you have a good credit score. We're looking at all the 8 factors that we just discussed. And if you're a startup business, your personal credit score is a great way to turn a decline as a startup business into an approval, because you can use your personal credit score in order to get approved. But 9 times out of 10, the bank's going to ask you to personally guarantee the business loan request. Therefore, we're going to look at your personal credit score. At the end of the day, really, what is a score? It's whether the bank can trust past history of you paying all debts on time, and really looking at those factors. So I want to take a minute and invite everybody to the December 14th conference call for the Women's Business Center. We're going to talk about SBA financing and SBA loans and the differences between the two. So if you are a startup business and you're on the call today, or maybe your tax returns as an existing business are not very favorable at this moment, please join me in on that call, because we're going to discuss the differences on the SBA loans and how it all works on December 4th, the same time. So I encourage you to sign up for that next presentation for the Women's Business Center.
Sabrina, let me check that date. I think it's September 14th, December 14th. So let me check it real quick.
Yeah, that's what I've got is December 14th.
Oh, okay. I thought you said December 4th.
Oh, okay. Yeah, so December 14th is, thank you, Deborah, in case I did say the wrong day, December 14th is the day. So keep taking these classes from the Women's Business Center, because one of the classes that we're going to have probably starting next year, again, that we had this year, is the difference in your personal credit scores and your business credit scores. How do you repair credit? How do you build on the credit? How do you build business credit score? And the importance and what the banks look at when you're looking at your personal and business credit score. So some product ideas to help build business credit. You can do a business secured credit card. That's where you're giving the bank $300 down and we give you a $300 business line of credit. And that is a great way for you to build business credit. You have business credit cards that we just talked about as an example. You have balance transfers to help save money on the credit card. You have cashback rewards and travel rewards when it comes to different ideas to help benefit with additional benefits as you're building business credit. So this is where we're going to talk about how much control you want over your business, whether you want to do a loan with the bank or you want to talk about equity funding, which is investors. So this part of the presentation, we're going to give you an idea of some investors and how it works. So equity funding, different investors could be crowdfunding, angel investors, venture capital, private equity. We're going to really focus on the crowdfunding, angel investors, and venture capitalists. So what is crowdfunding? This is where you're taking your business plan or idea for your business and putting it on the internet and trying to get investors. It can cast a wider net beyond your normal scope of where you're located. It can also give you a quicker response. This is a newer form of financing your business through investors. A lot of crowdfunding ideas are on YouTube as far as marketing. Some resources that you can visit for websites is Indiegogo.com, Fundvet.com, Kickstarter.com. So those are all the pros. Let's talk about cons. This particular type of investing it doesn't have regulations. In other words, you could put your information out there, try to cast a wider net and get investors to invest in your business. But at the same time, you can have somebody that might steal your idea and roll with it when they saw your information on the internet. So be very intentional if this is a type of investor that you're looking for, to do more research before you pull the trigger on this one. Angel investors. This is a great opportunity if you're looking to look for a mentorship, someone who has experience in your type of industry that has been successful, and they are willing to invest in your business based on the idea that you have. A resource you can use is angellist.com. And as I mentioned, they can bring a lot of experience and expertise along with additional contacts to leverage the growth of your business. They typically want to get in and try to have a very strong return on a very relatively short time basis. They can offer experience and expertise around asset diversification. They can provide professionalism and expertise. They can introduce you and give you access to the community around entrepreneurship, provide additional network opportunities, and the benefits is monetizing your expertise, helps you when you're a startup to become more experienced, and they also help you understand the trends, and it can have a huge potential option for returns. So consider angel investors as you're trying to find the right investor for you. Venture capitalists. Most of you know what venture capitalists are when I mentioned Shark Tank. Most of you have seen that TV show, Shark Tank, where there's a panel of judges and they're looking as venture capitalists to invest in your business. They usually look for extraordinarily high returns on their investment. And typically they're looking for well-established high-growth companies, not startup companies. They want to know how you've been handling your company on an interim basis, and then looking to invest in that business if you're looking to take your business to the next level, or you're looking for an additional project with your existing business. So an example is Sam has a great idea, but the bank would not approve him for his loan request. So he interviewed Sue, which is a venture capitalist. And Sue really likes Sam's idea and invests $1 million. So they both go into business and open Sam Incorporated. The investor owns 60%. Remember, they are looking for well-established, high-growth companies with an extraordinarily high return option. So the venture capitalist is going to own majority of the percent of the ownership of the business. In this case, Sue owns 60%, Sam owns 40%. They go in business and they do extremely well. Then Sue decides that the product that Sam was offering has peaked. It's trending well, however, it's run its course. Sue decides, because she has major ownership of the business, to sell the business for $25 million. Sam walks away with 40%, and Sue, the venture capitalist investor, walks away with 60%. That's a great example of generally how it works when you're looking for a venture capitalist. Opportunity for someone to invest in your business. So the key takeaways, as you're trying to decide which road you want to go down, do you do bank debt financing, or do you involve an investor? These are the questions and key takeaways. Plan for your future growth. I know you may know what you want now, but I encourage you to look down the road and decide what you want and how you want your business to run, not only now, but in the future. Because if you involved an investor, they own a percentage of your company, and you don't have something in writing that after a certain amount of time they go away, they will always be percent owner of your business. You need to know how much control you want, understand how much you need. A business plan, in my opinion, is a must to help you understand the journey and your roadmap to your success for your business. Some type of funding is better for startups and others for growth companies. So now you have an idea of what options are out there as you're trying to decide what's the right approach for you. So I've got up on the screen my contact information, and we're going to take the next, hopefully 30 minutes to really have a question answer session. And if we end and there's really not a lot of questions out there, I give you that time back in your day. But this is your time. This is the time to ask questions. There's no stupid question. There's no dumb question. You've got the bank, financial institution right at your fingertips right now, so you can ask whatever questions that you see fit. But what I want to do right now is start with the questions that some of you had put in the chat room. And I thank you for doing that. So we can go ahead and start with the first one. And this is from Mildine, does your business have to be unsuccessful in obtaining a bank loan before being considered an SBA-backed loan? That's a great question, and the answer is no. Typically, most of the reasons a client is looking for an SBA-backed loan is because they only want to put maybe 10% instead of 20% in the game. Maybe they have a little bit more challenged credit. Maybe they don't have collateral. So basically, there's a shortfall there in order to consider conventional financing, and then they start to look and turn to SBA funding. But there are benefits with SBA funding above and beyond all of those. So SBA is a great example of funding your business when you're a startup, whether you have lack of collateral, whether you have not as much money to put into your business. Those are all things that can mitigate that risk to be able to fund your business. And that's actually my area of expertise. So Mildine, if you can take yourself off mute and let me know, does that answer your question, or do you have an additional question for me?
Thank you, Sabrina. That answers the, I'm sorry, thank you. That answers my question. Thank you so much.
Very good. Thank you for asking. I appreciate it. All right, Ms. Stewart asks the question, where do you view your business credit score? And that is a really, really great question. So, Ms. Stewart, I know that probably in January, we're going to have another seminar that talks about all of those details. But I'm going to give you a very short answer because I don't want you to wait until January, or you're welcome to reach out to me. You've got my contact information up on the screen. And you've got my email address on there as well. You're welcome to email me. I would recommend going to dnb.com, and that is reference Dun & Bradstreet. They will give you your business credit score for free. And they actually will give you your score, true score of what your business score, credit score is. So let's see. Ms. Stewart, can you come off of mute, and if that answers your question, let me know if that answers your question, or if you have another question about business credit scores.
No, that actually answered my question. I signed up for that platform, so I wasn't sure if that was the same one.
Yeah, I think you picked the right one. There's several of them. The reason why I recommend DNB, which is D as in dog, N as in Nancy, B as in boy, DunandBradstreet.com, is because most banks and credit unions use Dun & Bradstreet to pull your business credit score from. So you might as well go to the horse's mouth and find out exactly what that score is. So I think, I commend you for choosing that one. There are actually three. That's one of the three that I talk about in the presentation that we're probably going to have in January. So thank you for asking.
Okay. Thank you.
That leads us to Miss, let's see, Deandra Griffin has a question. Where should your credit score be to get approved by the bank? Another really great question. So here is what I'm going to do for you. I'm going to bring up this screen and I hope everybody can see it. This gives you an idea of where your score should be on the personal credit score when you're applying for a business loan, because we're going to pull your personal credit. So I would say in the range of 670 and above, but if you're less than 670, it doesn't necessarily mean you'll get declines. The fees might be higher and the rate might be higher, but that is in the fair range. And I would encourage everyone on the call to have a goal of trying to get their score to 670, 680 and above. To answer the question on the business credit score, here's an example of the range you should be at to try to get the best approval. So I would say anywhere from 60 on up to 100. As you can see, the scores are different for business credit score. And that gives you an idea of what the credit score should be. So Deandra, does that answer your question? You might still be on mute. Okay, we're going to go ahead and move on. Hopefully that answers her question. And I love these questions because it's always helping probably everybody on the call. So Ms. Kimberly, let's answer your question. I just applied and received an American Express card. How long should I wait before seeking bank funding? I don't want to keep hitting my score. And I'm glad that you bring that up, because pulling your credit score is 10% of your score. So if you are more than 7 inquiries for a 2-year span, you could possibly be bringing down your score by 10% because you're doing that. I love you being intentional, Kimberly, about not pulling your score, that you're only pulling it when you actually need the credit. So when it comes to how long should I wait before seeking bank funding, Kimberly, if you can take yourself off mute, and I want to clarify what that really means to you for your question.
Well, as I am, so I was just awarded a grant here in Cabarrus. I'm in North Carolina. I don't even know where you are. I think you're in Virginia. But as that grant is awarded, like it's more of a micro grant. So I know that I'll need more capital moving forward with this particular business. And so even though I got the American Express, I kind of just got it to see if my score was doing well enough. But now that this grant has came through, I know I have some investors that are also interested. So I'm just curious on my best way to start to move forward without kind of hindering myself financially, if that makes more sense.
It does, and that's a great question. So congratulations on your grant. And yes, we service and help North Carolina customers too. Actually, we're in 5 states. We're Maryland, Delaware, New Jersey, Pennsylvania, and Virginia, and we actually have a footprint in Carolina as well. So I'm glad you even mentioned that, because that's the example of not all banks are the same. You know, maybe it's a different footprint. So one of the things that I would encourage you to do is maybe choose one last item other than the American Express. It could be that the utilities that you are using for the business, you want to put in the business name and ask the utility company if they report to the business bureau. So those are all additional ways of increasing your score while you're going through your journey of finding out what's the best funding source for you. Because as you've already got the grant, you might not need the funds right away, but you want to still continue to build on that credit score, right?
Yes. Correct.
So question for you, Kimberly, do you need additional funding?
I will. I am, which kind of goes into my next question, because I am trying to start a tiny home community here, and the bulk of the money will probably be for land. So yes.
Okay, very good. I would say SBA is a great opportunity for you to consider, and we can talk about it, whether you choose Fulton Bank or not. Please feel free to reach out to me. We can come up with a good strategy of, you know, what should you do first, second, third after the grant, and, you know, some ideas of additional funding resources as you're moving forward with your project. I would love to discuss that with you, but SBA is a great resource for lot purchase and building and, you know, less money, skin in the game, you know, that kind of thing. But you've already got the credit card, which is an American Express. Is that in the business name or is that in your personal name?
It's not. It is personal. I should have did the business because they have been bombarding me with the business line. But no, I chose opening it in the personal, and now I'm scared to try for the business, because when I did speak to the rep, she said, you know, it's a toss up. They may pull your personal. I mean, yeah, they may pull your personal, depending on your business history, and it's just kind of they don't know, the computer automates it. So yeah. Yeah,
and you're right. Those are all things to consider. So if you're looking for, I mean, as an example, the Fulton Bank special that's going on is the business credit card, 20 months, no interest. We approve business credit cards up to $50,000. So if you're in that range, when the time comes, that might be another option. So just being intentional about choosing the right card with the right benefit, instead of, hey, I just need a business credit card, I'm gonna go online or whatever and just apply for anything out there. So that would be my next piece of advice.
Right.
So thank you for asking, and the conversation, collaborative moment. I appreciate you being brave enough to do so.
Thank you.
So Ms. Thomas, realistically, where does the personal credit score need to be for a new business, as if the business is new outside of a business plan? What is needed and how realistic if that business would receive a loan or, okay, so let me do this. Ms. Caitlin, can you come off mute? And I just want to make sure I'm being clear about your question.
I'm sorry, I see that it was all over the place. So the question is, realistically, being a new business, well, I guess how realistic is it that that business would get approved for a loan? Or would a new business typically be redirected to start with something like a credit card and things of that nature?
So great question. You have two resources to get approved being a brand new business. One, SBA loan or line of credit, or two, a business credit card. Those are your two options. And your personal credit is going to dictate the score part, because you don't have a business credit score. So that's why it's so important to make sure, and this is a really great question, thank you for asking, to make sure that the personal credit is in line. So this is a great example of, okay, let's say you are applying for an SBA loan, or let's say you're applying for the business credit card and you're a startup business. We're going to pull your personal credit score along with some of the other C's that we talked about in this presentation, and decide whether you're approved or declined. So I know that's a little bit more direct. I think that's really where you were coming from. Look, just tell me what it is when I'm a startup business and what I need to, consider. I think that answers your question. But does that answer your question, Ms. Caitlin?
Yes, it does.
Okay, very good. I'm glad you asked. All right, I hope I'm not mispronouncing. Let's see, Tristina, what is the website again for business credit score? I'm glad you asked. Here you go. Obtain a unique identification number for your firm called the Data Universal Numbering System. It is HTTP, all of this, and you can see here, www.dnb.com. They offer to help you build your business credit score for a fee, but you do not have to pay for that. You can go to dnb.com and get your business credit score for free. So thank you for asking that question. Ms. Kimberly Delaney, I am planning a tiny home development with farming, agricultural on the property. Should I seek out ag-based bank or credit union? How much will that matter as I begin seeking land? What is considered a good score with DMB? I think we answered the good score with Dun & Bradstreet, and I'll bring up that slide again. So back to the first part of your question, thank you for asking. Agricultural farming, absolutely. You want to find a bank that is user-friendly and knows how to do funding and lending to a business that is your type of industry. Different banks do well in that area. I'm going to give an example. Fulton Bank is one. Selfishly, I'm saying that. However, I'm using that as an example because we're based out of Pennsylvania. It's where the Mennonites, the agricultural, all of that type of industry resides. So we do business in that area extremely well. You may want to, whichever demographic that you're going to be located, reach out to the Department of the Economic Development Department of that city and see if they have any additional grants for agricultural opportunities that is going to be serving your area, and see if there's additional funding resources and options for your agricultural farming option for the property that you're doing for the tiny home development. So Kimberly, does that kind of answer your question, or do you have additional questions at this time for that?
So basically, I just need to email you so we can open an account. It's basically what I've got.
Yes, yes. I will tell you, out of respect for the Women's Business Center, because they're not here to direct you to a particular bank. They have to be, kind of like Switzerland, and they're not going to sway you. So I will tell you, there's Farmers Bank. Smaller community banks typically do well in this area. But I would love to have your relationship with Fulton if you want to come and interview me. I would love that opportunity. Thank you.
Thank you.
Oh, and I see Ms. Stewart put the website there. Thank you. Yes, let's see. How realistic is it that a new business is approved for a loan, or are they redirected to start with a credit card? So I think we answered that question. Where is the best place to learn about the economic trends, local market conditions, as well as for my competitors and majority of industry for my business? Tristina, Tristina, I hope I'm saying that right. That's a really great question. There's what they call IBIS, IBIS. And if you want to reach out to me by email, if you tell me what your industry trend is or industry is, I can send you some additional research information specific to your industry that talks about it. And send that to you by email. That is a great opportunity to take and cut and paste that information into your business plan as you're applying for an SBA loan, if that's what you're considering to do. So a great question, because it tells me you're really in tune to want to make sure you know how to run this business and you're going to be successful at it. So thank you for asking for those resources. And you can actually, a lot of them might not even be open. The library also has an opportunity for you to reach out to IBIS. And I have a couple of other resources internally with Fulton Bank I'm glad to share. So thank you.
Also,
yeah.
I just want to add to that, Sabrina, the Women's Business Center, because, you know, as Sabrina, you'll be able to access the IBIS reports and you know how expensive they are. The Women's Business Center has a research class regularly, so you should keep an eye out for that. And we have a grant going on now that will cover the cost of that report for you. So you can always register for our research class, and we can get the full report for you and send it to you.
See, that's why I love the Women's Business Center, Deborah, and you. You're awesome.
No, I've been there, done that, but been an entrepreneur. So I'm excited about what I'm doing right now and really excited about the grant money that we have to support our entrepreneurs. It's really exciting.
That is exciting. That's awesome.
Sabrina, I have a question.
Sure.
I was wondering about the SBA loan reporting mechanism. I seem to recall a business that did an SBA loan a few years back, one of their smaller Soho loans, and they had difficulty getting the bank that SBA, they did the lending through, to report to Dun & Bradstreet on their payment history. The young lady was saying that she had even paid off the bank early. And I, of course, went through her, told her to go through her representative in her state legislation, and then also her federal representative, just to find out if they could get some help. But SBA at the time, the bank that she had pulled the loan from was in California, and there was no requirement that they report on her payment history. And she was very disturbed because she didn't know. Number one, she didn't really need the loan. She took it to build credit. And she said now they didn't even report. I think it was something like a $10,000 or $15,000 loan. She said they didn't even report that not only did she pay on time, but that she paid it off early and she had no recourse. So what are the requirements for banks, industries that are doing SBA type loans, and even just a straight line of credit from bank to customer, as far as what are the requirements for them to report to Dun and Bradstreet so that a company can build that credit?
That's a really great question. And unfortunately, your friend or the person that you're referring to was dealing with a institution that is not required to report. So business reporting to business bureaus and personal reporting to credit bureaus on the personal side work a little different. I would highly recommend, I'm going to answer your question, but do sign up for the class that Deborah is going to have again starting next year about the personal and business credit. I've got a screen up here, and each reporting agency, you can see the word usually provides a free business credit report. That's a great word because banks are not required to report to the business credit bureaus. And when you are applying for business credit for the purpose of building your business credit report, before you pull the trigger, ask the lender or financial institution, do they or don't they? Because now, unfortunately, she did a loan. She didn't need it. She could have saved money, and the whole purpose was building business credit. She could have saved a lot of time and money and effort by choosing another source to build her business credit, or just simply she didn't know that she needed to ask that question. Does your institution report to the business bureau for my report? So here's another thing. Yeah, so here's another thing. I want to be intentional about this. What's great about the business bureaus, you can provide information on your trade line directly to the bureau yourself and give them the most favorable credit rating, strongest, most established trade lines of credit for the information that your business is registered for. So the business is registered to the credit bureaus based on your tax ID number, your address, and any other owned businesses that you've owned. So you have skin in the game on this. She might be able to take that information, provide it to the business bureau itself, and have them see that she was paying on time, and they might be able to report it on her behalf.
Oh, that's pretty nice. And I don't understand why banks aren't required to report that. And because one of the things she said was, she said, I'm sure if I had been delinquent, they would have reported that. So why is it they can report the negative and not the positive? And shouldn't that be something that they're required to do? If I'm doing business with you and I'm your customer and you want to do me justice, it would seem that you would want to report my good behavior. I don't understand. I'm not understanding that part from the banking industry. Why wouldn't you want to? Is it a matter of personnel, operations costs, or is it just a policy decision not to do it? Because that does the small business a great disservice in that I'm using you. I'm a customer to you. I'm paying, in good faith, doing everything I'm supposed to do, but you will not, for some reason, report my behavior. And that's how we all do. I mean, even like you said, personal is different from business, but I'm not understanding that process or the reason why that would be even a policy of usually, that just seems a little foggy to me. And that, yes, I can submit, if I were to do that, I could submit all of my documentation, monthly payments, payoff date, and all of that stuff. I could do all of that, but why would I have to do that if a bank is already in the reporting business?
Yeah, Delilah.
Great
Sabrina,
question.
correct me if I'm wrong. Banks are a business, just like you have a small business, banks are businesses. So, and humans run those businesses. And I agree with you. It would be great if everybody did the same thing, but that's just not how things work. Um, it just doesn't. That's why we put so much effort into educating people to ask the right questions so that they can get the answers that they need and that they want. So you have to interview everybody. And I think that's on every level. Interview several lawyers, interview several insurance people, interview several banks, find out what their processes are, their policies are, to make sure that that's in line with you. But I agree with you. It's not fair. I try to get a great insurance rate because I have a flawless driving record. I had to go out of the state to find the rate that, matched my budget based on my driving history.
My goodness.
So you have to talk to, unfortunately, a lot of different people, and we have to educate ourselves on the correct questions to ask.
I love that feedback.
That's absolutely wonderful what you said, Deborah, and it's true. And I'm wondering if, and this is more for the ladies on the call and maybe even some small business associations, is that something that we might be able to put toward the House Small Business Committee or the Senate Small Business Community? Because I think that it pigeonholes, especially in this climate where small businesses are restarting, relaunching. I think it pigeonholes a business ability to grow. If the bank, yes, you're their business, but I'm your customer. If you're not giving me everything that I need, then maybe there are other ways and other places I can go.
Oh,
and so,
absolutely.
Those are the things I'm thinking about, because I think it does small business a disadvantage for us to be out there working so hard. And then when we do use some of the lending tools as a bank's customer, and you still aren't going to amp up and support me so that I can continue to grow. I like you said, I don't understand it either, but maybe that's something. I know I'm here in Maryland, and one of our senators, Ben Cardin,
oh,
absolutely, he's on the
absolutely.
small business community. So those are some things that, and I had the fortune of sitting on a board with his state director. So those are things that I think about as a small business, especially a woman-owned small business, just to try and get level the playing field a little more and make us a little more competitive. And not to down the banking industry, because I'm not. Like, they're necessary, just like all businesses are. But I think we could do a lot better by small business, and it would help even some of the ladies on the call. We're looking to build business. It doesn't do me any good if I start out doing business with a bank and they say, well, we didn't report it, but you said you did report it. Well, our bank changed policy. Then you're up the creek without a paddle, because even though you did the interview, they still not required, to report.
Yeah, Delilah, you
Yes,
are
ma'am.
100% right. I am one of those American citizens that knows the President of the United States works for me. And yes, you have to reach out to all of your senators, your representatives, vote for these different things. Unfortunately, a lot of us don't do that, but that's really where the power is. It really is. And that's always been my attitude, that all of these different representatives are on my payroll. And you have to take that particular perspective on it and be active in the laws and the rules and the regulations that are put upon us as citizens.
Awesome.
So Deborah, and
thank you.
If I can piggyback onto that, the screen I have up, and Deborah, thank you for the collaboration. I appreciate always your support. If you notice the difference between the personal and the business credit profile and scores and all of the monitoring, it is not state or federally regulated. Mm-hmm. The personal credit is, and the credit scores. That's why you can't just walk out to the bureaus and say, what's my score? Because banks are regulated when it comes to pulling your personal credit, and by law, to give you a letter, who we pulled, what they said the score was, and 3 algorithms to make it stronger. There is no regulation for the business credit. So then what you can do, and Deborah had mentioned, you know, the power and giving you back, knowing what you can do until it becomes regulated. I think that about 10 years ago, they talked about making it regulated, but they had a challenge finding business bureaus that were very similar to how to regulate the personal bureaus, and they just, you know, decided not to move forward with it. So in the meantime, we've given some things like giving and empowering you to control what you can control in the meantime, and that is reporting to the agencies. And do take that class, because I speak detailedly of empowering you until it ever becomes federally regulated to things that you can do in the meantime to report it on your behalf.
Thank you so much. That is really good. And that's good information too. And I promise to pass it on, because I don't think that she understood that she could have sent her own history in and gotten, credit for what she did. But I didn't know that, because I would have told her that. But now that I do know that's at least an avenue that she can attempt.
Absolutely. And I appreciate you bringing up and let's talking about it and putting the elephant in the room. So thank you for doing that. I appreciate it.
All right. Thank you.
So, Miss Deborah, I think it is 12 o'clock and I want to respect everyone's time. I am so sorry if I did not get to all the questions. I love the collaboration and the openness and conversation that everybody had today. It was really fabulous. And reach out to me. My contact information as one last ditch effort to provide that to you is up on the screen. If you have questions that I did not answer, I'm happy to answer them after the fact. And for those of you who do not reach out to me, I wish you, your family, your community, what you're doing for your community and your small business, woman-owned, minority-owned, the best of success, and continue to collaborate and reach out to the Women's Business Center for additional resources that can help you overcome challenges that you might be facing. And thank you so much, humbly, for having me here today, Deborah. I appreciate it.
Oh, my pleasure. And please note that Sabrina does these classes regularly for us. I will be getting with her to see what we're going to be doing in 2022. I did put the Understanding SBA Loans registration link in the chat. So if you're interested in taking that class, please look for that now before we get off the call. If you don't capture it now, check out our weekly newsletter. Anybody who's on this call probably does get our weekly newsletter. That information will be in that document. And, take these classes with us, let us help educate you so that you can go out and be stronger entrepreneurs. This class is also recorded. So I think I was told 24 hours, 48 hours, they'll be able to put it up on our end. And there will be a link in the newsletter that tells you where to find our recorded programs. Okay. So thank you, Sabrina. Thank you, Brett. And I agree with Sabrina. If this is the last class you do with us for this year, please have a happy, safe holiday.